How to select and value REITs. Having discussed the benefits, risks and considerations when investing in REITs, we will now look at how to select and value REITs. There are many ways to select REITs. Some of the more common ways are the top-down approach. This method starts by selecting the country, then the industry, and then the specific REIT. By comparing yields. As noted earlier, a REIT's yield may appear attractively high, but this could be because its price is depressed because of selling pressure. By examining growth potential. Investors should read the REIT's offer document and research reports to gain an understanding of its earnings growth potential. By checking its gearing ratio. Highly geared REITs are generally considered riskier. Investors can make use of the SGX's stock screener. Valuing REITs. When it comes to valuing REITs, the most common methods used are yields, net asset values, capitalization, discounted cash flows. The yield-based method. This approach compares the REIT's yield with a risk-free rate. The most commonly used benchmark for the risk-free rate is the 10-year yield on Singapore government securities, such as the Singapore Savings Bond or SSB. Assuming that the 10-year SSB's return is 2.71%, if the REIT's yield is 6%, then investors have to ask themselves if the premium of 3.29%, 6% minus 2.71%, is reasonable, given the REIT's earnings and growth potential versus its risks. Investors can track the spread between government bonds and a REIT's yields over time to see how the market perceives the REIT's riskiness over business cycles. Ultimately, it is up to the investor to decide whether a REIT's yield is sufficiently attractive, given the risks and rewards. The net asset value method. Net assets are the market value of assets minus liabilities. This method is popular because REITs are asset-heavy instruments, and the Monetary Authority of Singapore, or MAS, requires a REIT's assets to be valued at least once a year by a professional valuer. However, it is important to check that the valuer's assumptions are realistic, or whether it is just extrapolated from current conditions. Capitalization rate method. A REIT's capitalization rate is obtained by dividing net operating income by market value of the assets to give the rate of investment return. This is then compared with other REITs and the risk-free rate. This message is brought to you by Institute for Financial Literacy, a collaboration between Money Sense and Singapore Polytechnic International.